Stocks slip as Fed Chair Powell casts doubt over a December rate cut, and the street tries to assess the implications of the Trump-China trade thaw. Metals and utilities are the bigger drags, while energy and industrials eke out gains.
Dr. Reddy's gets a non-compliance notice from the Canadian drug regulator seeking further information on its proposed launch of generic semaglutide. The expected delay in launch is expected to significantly impact its FY27 sales.
The Supreme Court's verdict restricts review of Vodafone Idea's relief to the additional AGR demand. It also limits any such concessions to Voda Idea alone. The stocks of Voda Idea, Industars and Bharti Airtel slip.
Larsen Toubro shrugs off a second quarter earnings miss due to monsoon impacting execution. The strong order outlook and on a cited pickup in private capex, a key order win in Europe and a planned foray into precision equipment lift the stock.
US President Donald Trump says a trade deal with China could be signed pretty soon. Also cuts the additional 20% fentanyl tariff on China to 10%, bringing the overall tariff on the country to 47% from 57% earlier. The two countries also reach an agreement on chips and supplies of rare earths. Trump is also set to meet with Xi Jinping in China in April.
Hello and welcome. Good afternoon. You're watching us here on Halftime Report. I'm Mangala Malu. With me, Ekta Batra. Currently, as we speak, the market trudging around near the lower end of today's trading session. What's also at the lower end of today's trading session so far is the rupee, which has weakened against the dollar. And as the intraday chart comes up for you, as that has happened, the markets move further lower. But today, it found some demand at 25,900 and supply at 26,100. Does that continue to play out or not is something that we will be monitoring over the course of the next hour and, as we mmove towards the close of trade. Hi, Ekta.
Hi, Mangalam. Yes, absolutely. Around a 4/10 for depreciation, which has taken place for the rupee. So always doesn't bode well. 88.5 odd is currently where the rupee is at, or 88.6. But nonetheless, besides that, the equity markets are also a bit sluggish at this point in time. We have the Nifty, which is below 26,000. We have the Bank Nifty, which is down around 0.4% at this point as well. I just want to point out that, the mid caps and the small caps in comparison seem to be consolidating. So the mid-cap index is just about lower by around 0.1%. We have the small-cap index, which is just about flat in today's trading session as well. So both those indices should come up for you. The advanced decline ratio, however, could be wanting for more. So we have a negative advanced decline ratio on our hands. But we have a lot of stocks which are in focus. So L&T, which is in focus post numbers, Dr. Reddy's, which we will be addressing in just a bit, Vodafone Idea, which is in focus as well. And besides that, from the broader markets, to watch out for a couple of these stocks, such as Blue Dart, which is now up around 20% on a week-to-date basis. Consecutive gains is what we are seeing on a couple of counters like that. But let's continue our conversation with regards to Dr. Reddy's, because that stock has been in focus after the news of them actually receiving a non-compliance issue with regards to their semaglutide opportunity in Canada. So what they have said is that they will be responding back to the Canadian regulator when it comes to, the semaglutide opportunity. But as of now, what we do understand is that analysts have said that it would be around $100 million in terms of sales for FY27. And one would really need to assess what takes place, when it comes to further competition. So Dr. Reddy's, the management, who had sort of hinted that, there could be a possible issue with regards to this particular application in their Q2 numbers, they have now indicated that it is also a very competitive market. So analysts are assuming around 5 players in this particular market going forward. And that would mean that there could be competition for Dr. Reddy's. There could be a miss in terms of earnings if in case they do not launch in time. So what is the street anticipating in terms of a launch timeline? Anywhere between 5 to 12 months. So their approval could be in the next 3 to 4 months, 5 months, or maybe in the next 1 year. So by that time, how many other companies are already selling semaglutide would be something that the street would be watching quite closely. Remember, it goes off patent in Jan of 2026. So that's the news with regards to with regards to Dr. Reddy's, but Shelly Engineering is also in focus, Mangalam. You know, Shelly Engineering should come up for you. That stock is down around 10% in today's trading session because they do provide the pens that Dr. Reddy's uses and other companies use when they administer semaglutide, which is basically in the injection form. It'll be interesting to see what happens when oral drugs come in the middle. But as of now, that stock is in focus on account of that. Obviously, there will be other opportunities which will be which they will compensate.
I'm just looking at at the bottom of the screen, Fed Bank Financial, FedFina as we know it. You know, there will be a clean out trade likely from True North Fund because the fund is closing. Obviously, there has been a spike in the stock price. If you look at the last 1 month or so, there has been a decline in the stock price. So a clean out trade, a possible clean out trade means that the supply overhang goes away. So yeah, you have the 1 month stock where the stock is down about 5% on the expectations of a trade coming anytime soon. And now that it has finally come through, it will be very interesting to see who the buyers are and at the same time at what price this happens. If this were to happen, at a price closer to where we are right now, it would be obviously a positive largely because supply goes out. And it's not because of any other reason, but apart from the fact that, True North, the fund life itself has ended. So we'll monitor that story, perhaps get you some more on that as well. In the meanwhile, as we try and connect with experts on the pharmaceutical space, we'll take a short break and on the other side, tell you also about the stocks which are moving around in trade.
Welcome back. Well, let's continue our conversation on Dr. Reddy's. We have Vishal Manchanda from Systematics Group joining in to discuss what he thinks of the developments. Vishal, hi, welcome to the show. Well, this was the news that the street was waiting for, but it's been disappointing. But the street, Dr. Reddy's sort of set us up for it in Q2 when they said that they can't really rule out a complete response letter in Canada for semaglutide. What's your sense? Do you think that they'll get approval in time to monetize the opportunity well enough?
Well, I think it still remains a question whether we'll see an approval coming through and maybe what timeline. So we know this is a complex generic, and if you look at the track record of India in terms of getting complex generic approvals. So like if you look at this specific category, which is a peptide drug and a drug device combination, we don't have too many precedences, like in terms of what has worked. So not many companies have got approval around in this category. So I think it is still uncertain. And then we also don't know whether other generic companies would get an approval for this.
Okay. All right. So you're not sure about the other generic companies to get an approval for this. But what are you factoring in when it comes to when they could get approval by? Because some are estimating maybe Feb, maybe March. Some are estimating maybe a year from now. And what is your estimate in terms of how much they can make? Is FY26 completely washed out in terms of an opportunity? And what are you estimating in terms of FY27?
So I think my sense is at least it should take at least 6 months from where we are today. Because if you look at Reddy's was the earliest filer here, one of the earliest filer. So first or the second filer in the category. So I think about 15 months have gone into the review and still we are seeing a complete response letter here. So my sense is there are major challenges here, and maybe 6 months is something we should actually build into our estimate. And then again, the upside would largely depend on whether other generic companies get an approval and how many of the other generic companies get an approval. I think there are 5 companies that have filed. So if all 5 get, then probably it's not that interesting a story as we would want it to be.
Right. Dr. Reddy's on its part is saying that all of this can then be offloaded in other geographies, if not Canada. Do you think that will happen at a lower price, and as a result of which the impact would be a lot, more than what they are anticipating?
You're right. So all the quantities obviously can be offloaded into other geographies.
Exactly.
But Canada was more interesting because DRL could have been one of the early winners here, and they could have got a higher value out of the same volumes. But that probably might not happen in other geographies, which I think would be extremely competitive.
So in your estimate, what could the impact be from a dollar value perspective, if at all?
So what we were building in our numbers was $100 million of contribution from semaglutide in Canada. Probably if they get an approval quickly and others don't, that still can be achieved, $100 million in FY27 from Canada. But if at all they miss this, so they miss the Canada opportunity. All other markets, I think, apart from Canada, my sense is all other markets maybe like between $50 to $100 million put together in the first year.
Okay. Vishal, which are the other Indian companies which have filed and could be waiting for approval in Canada?
As far as I know, Sun is the only one here among the Indian names that has filed for a Canada approval. Rest others are all global generics.
Okay,
so Sandoz, Apotex, I think Aspen is another, and probably Mylan.
Okay, so based on how complicated the drug is, do you assume that it could be a tough task for something like a Sun Pharma also?
I would actually think Sun is a probable winner here. They have a track record in peptides. Although semaglutide is a more complex peptide in terms of the complexity, it's a longer chain amino acid peptide. While most approvals that Sun has secured for peptides are shorter amino acid chains peptide. And again, this is a drug device combination, but I think Sun has successfully executed on drug device combinations in the past.
Okay. Shelly Engineering, that stock is down around 9%. Do you look at it? Is Dr. Reddy's such a huge contributor to it?
So our understanding is Shelly Engineering is basically the supplier of pen here, and they probably are a supplier to pen to most generic companies. So my understanding would be Shelly may not get as much impacted as DRL, because for Shelly, they are more concerned with volumes. So for them, Canada is not a high value market. They probably get the same value out of every market that they would serve. And from a volume perspective, my sense is Canada is a much smaller market. If we look at the entire global market that's going to open up in the next 1 year, from a volume perspective, other markets might be larger. And I think this should not be a very large market for Shelly Engineering.
Okay.
But again, Shelly might also supply to other generics that would have filed for approval in Canada. So if not Reddy's, they would still be able to supply to other generics that would have filed for Canada markets.
Exactly. So they do have, other opportunities which could probably compensate. So one should probably look at it that way.
Yeah. So they are not as much hit, or as probably DRL can get impacted because of a delay here, because Canada was a high value market and probably going to deliver larger numbers for DRL. But for Shelly, it's not, they are kind of going to get the same value out of all markets. They're more of a volume driven story.
Okay. All right, Vishal, we're going to leave it on that note. Thanks very much for joining in and speaking with us. And I'm sure this is a story we're going to keep revisiting, considering that we do have the India semaglutide opportunity as well. It'll go off patent in March of 2026. And Dr. Reddy's is currently in a patent litigation with Novo Nordisk to possibly even launch semaglutide earlier if in case there is any kind of favourable outcome. It's currently in the courts in India. We'll take a short break, but up next, Abhijit Choksi will join in with some trading calls. Stay tuned.
Welcome back. You're watching us here on Halftime Report. The market holding around that 25,900 mark, a little above that. But now we have with us Money Control Super Pro expert Abhijit Choksi, who joins in. He's the founder of Stockify, a SEBI-registered market professional who tracks market movements and identifies trade-worthy trends for Super Pro subscribers every day. Abhijit, what are you looking at today, and what's your subscription or what's your prescription for those who want to trade?
Hi, good afternoon. Thank you for inviting. So I would like to discuss two stock ideas today. The first stock idea is from the infra sector. The company is called PSP Projects. So last year, Adani Infra bought almost 35% of this company. The market cap of this company is around 3,500 right now. Just as a disclaimer, we have recommended this stock recently to all our registered clients this week at around 800 levels. Going forward, I see a lot of potential in this, especially backed by Adani. Their order book is going to inch up drastically. Almost they have 10,000 crores of orders right now. And going forward, I believe they will be gaining at least 3x their order book by FY29 as per the company guidance. And 8 to 9% EBITDA margins, if I consider, then also it's available at a very steep discount. So even at current market price, I believe it's a good opportunity for next 6 months to 1 year point of view. And another company which I would like to discuss is Aadhar Housing Finance. I do believe Aadhar Housing Finance has a lot of potential, especially it has a backing of the Singapore-backed Blackstone. And the current market cap is 20,000 crores. And especially on the back of housing demands going, I believe they have at least 30 to 40% potential in next 6 months period. 75% is owned by Blackstone, and they have recently released an open offer where they are interested in even getting 25% more of this company.
Okay. All right, Abhijit. Thanks very much for that. In fact, that was a very insightful session. Thanks very much for joining in and giving us all of that perspective. Well, for our viewers who want to access these kind of actionable insights daily, check out Money Control Super Pro, where a market expertise does meet technology. Subscribe now and get an ad-free, data-rich and globally connected experience. And here's a festive bonus. 10 lucky subscribers every day stand a chance to win gold coins. Just scan the QR code on your screen or download the Money Control app to know more. Welcome back. Well, it is a little lower for the Nifty now. So 25,921 is where we're at. So we're down around 0.5% at this point. The advanced decline ratio, like we've been pointing out, has been weak from the get-go. So it's not really improved on that front. And from the stocks which are actually losing ground at this point in time include HDFC Life, Bharti Airtel, Sun Pharma, Bajaj Finserv. All of these stocks trading with cuts of anywhere between 1 to 2%. Dr. Reddy's has given up a little bit of its gains, so that stock is just about lower by around 3.8%. But let's now shift focus to the latest in the primary markets. One of India's biggest stockbrokers, Grow's IPO, is set to open on November 4th. Our colleague Reema spoke to the management on their growth plans and use of IPO proceeds. Listen in.
The big elephant in the room when it comes to your IPO is the potential of F&O curbs. SEBI is reportedly looking at phasing out weekly expiry. But have you done any sort of sensitivity analysis that if there is a 10% drop in the futures and options volume, what will be the impact on your revenues and margins or EBITDA?
So what you can look at is the last year's. So we had certain regulations, and I think all the numbers are public, so maybe that can give you some idea, how resilient the company is. And we have been quite resilient over the last many quarters. So, yeah.
There's some estimates which say the impact could be as high as 20-25%. Is that an overestimation?
Oh, I can't comment on that.
Okay. You spoke about the numbers, but the Q1 numbers reflect the impact of the regulations which came in effective October. Your overall operating revenue was down 18%. Broking revenue was down about 17-18%. And even the number of active transacting users saw a drop in the June quarter.
We are not just a broking company. We are building like India's largest wealth platform, and we have multiple businesses. Broking is of course the largest and the kind of the leader there, but that's how we look at it, right? Multiple products. So we are like building direct to customer multiple product company where customer has an option to kind of invest in any product that they want, right?
Is there some sort of a slowdown at a broader industry level? The pace of demat account openings has come down. There is that fear of F&O. F&O volumes, cash volumes have also seen a dip.
I started investing in capital markets like I think more than 20 years back. And in last 20 years, and of course like a lot of people have been even longer and so on. And we have seen like ups and downs. So we look at long term, right? You know, India, as I said, like, you know, if India becomes like a developed, like, you know, like a from the economy perspective, capital markets will be very large, right? So I think in natural course of kind of this is like a natural, this is the nature of the market, right? So and these are like so it goes down and then goes up, goes down. So by the way, from growth perspective, we are still growing, right? Our net customer addition is still kind of as a platform have been growing.
One of, I think, the priorities for you all appear to be MTF, Margin Trading Facility, because a part of the IPO proceeds are also earmarked for MTF. It's a nascent business. You all started very recently, but it's scaled up quite dramatically. I mean, it's really taken off. In FY25, the MTF book was 600 crore. In Q1, it was 1,000 crore. What is the ramp up that you see for MTF?
Yeah, so before that, I want to explain how the platform works. See, so as I said, like we have like around 14 million active investors on the platform and so on. And every product that we add, kind of that has access to like all the customers, or the other way around, customers get access to like a new product, right? And the adoption curve starts taking. So when we launched mutual funds, we started with 0 customers. So it took, let's say, some time to get to, let's say, 1 million customers or whatever, right? And then when we launched stocks, you already had like a lot of mutual fund investors on the platform. So then the uptake starts happening fast. So growth, then you launch any next product again faster and so on. So that is what I think every product that we launch goes through, like, you know, a very, very sharp adoption cycle. And that is what you are seeing in, you saw in MTF also, as you said, in quarter ending FY25 and Q1 and so on.
Actually, tell us the new sources of revenue, the products that you've launched, and which one are you most excited about, or which could be the profit or growth engine for you?
So let's talk about these two kind of categories. One is in wealth, for example, we are kind of super excited about one big trend that we have seen is the rise of affluent customers on the platform. So we are democratizing investing in the country. But what happens is, as customers spend more time on the platform, they get affluent category, you know, so they need wealth management solutions. This growth of this affluent category is more than double the growth of the overall platform growth. And the reason is because it has two top of the funnel. One is our existing customers are graduating into the affluent, and second is because we became like a leader like 2.5 years back. A lot of affluent customers who are existing kind of investors, they started coming on, grow in a large scale. So both of them combined together, the base is growing very, very fast, and the numbers also again we have published. We launched commodities recently because we started seeing very, very good demand there and so on. So MTF adoption will continue happening. There is commodities we are launching. And then what we are also seeing is that rise of power traders on the platform. There is a certain category, they get into like, you know, like professional kind of trading. So we have built a lot of tools for them as well.
You know, all this seems like it will be margin accretive for you because you already have the existing customer and now you're selling more and more services to him based on what his requirements are. So the cost of acquisition is going to be nil for this kind of cross-selling. I mean, what's the overall view on margins? You did about 56% adjusted margins in Q1, 59% in FY25. Is that sustainable, or can margins improve from here on?
Yeah, so see the way so the way things work is like we have primarily three costs in the company. One is like cost to grow, as you said, like marketing costs. And the marketing cost comes on the only the new customers that come, right? And there also, by the way, more than 80% of our customers are organic customers where we don't have to spend money, right? So that is cost to grow. Then we have cost to operate, which is like, okay, to run the business, you need, we have people, right? And that's the biggest strength that we have. So there good thing about tech companies is, right, you don't have to scale as your revenue, as your ARPU, as your number of customers grow. You don't have to kind of scale the team size and so on. So the tech does the work. You don't have sales force, you don't have branches and everything, right? So that is the cost to operate. And third is cost to serve, which is like your variable cost, your tech cost, server cost, and so on. And they also kind of don't grow as linearly to revenue, right? So all three costs kind of are not kind of linear to revenue. So if your revenue grows, then kind of some of it falls down to
so do margins expand or stay where they are?
What I explained you, margins have been expanding over last many years. And these operating leverages will continue kind of happening.
You did profits of about 1,800 crore rupees last year. You've been profitable now for the last 3 years, is that correct?
Yeah, last 3 years, except for this operating profits, yes. But because of that restructuring, we had this outgo. So yeah, FY24 was reported was negative, yeah.
Okay, but if you strip out that one-off tax expense, you would have been profitable from FY23, 24 and FY20.
Yes.
So 1,800 crore approximately last year. Can that number scale up to say 2,500, 2,700, 3,000 crore 2 years down the line with the kind of products that you have? I mean, are we in the right ballpark?
So I would not comment on the future projections and so on.
How did you arrive at the valuation of 61,000 crore rupees? There is intense scrutiny on valuations right now. Valuations today are in mid-30s, trailing, slightly higher than if I look at a peer like Angel. What was the thought process behind valuations? And over here, the growth projections come into picture, right?
You know more about it, but typically when you value a company, there are kind of, bankers, buyers, sellers, and then they come up with all these numbers and so on, right? And of course, like typically you look at multiples of the peer companies. You look at, how fast are you growing? What is your margin? How like leadership of the brand, right? And so on, and all those kind of things. They either give premium or discount, and then come up with something number and so on. And I think we came up with this number.
Right, that is the management of Grow. The IPO comes shortly as well. We take a short break, come back on the other side. A quick note for our viewers: if you'd like to access expert-driven insights and actionable chart patterns, you can simply scan the QR code which is up for you on the screen. Subscribe to Money Control Pro and get daily expert calls, actionable charts, and insights to power your investing decisions. Plus, this festive season, there's more reason to celebrate. 10 lucky subscribers each day win 1 gram of gold. So don't wait, scan, subscribe, and make your portfolio shine brighter with Super Pro.
Welcome back. Joining us on the show now is Sachin Jain. He's MD World Gold Council. Sachin, hi, thank you so much for joining in. And strong numbers coming in from the report for third quarter that has been put out from World Gold Council. While the global market's clearly looking at a quarterly record number, but for India, the jewelry consumption clearly is a bit of a dampener.
Thanks, Manisha. It's always an honor and pleasure to be here on your platform. And as you rightly said, it's been quite an exciting time in gold overall. And globally, we've witnessed the biggest quarter yet in history. 1,313 tons, 1,313 tons of global demand that came through, largely led by investment demand of over 524 tons. And of course, as you said, it's not just in India, but we've witnessed a global decline in jewelry demand. And that's, of course, was expected with the current pricing of gold and how the consumers respond. So absolutely spot on there.
Oh, well, yes. So until September, it hasn't been so good. Even when you look at the Indian imports, they're in, Sachin, those have been on the weaker side as well. Is October looking any better? I know it's still early to talk about that, but October being the festival month and all, do you see numbers getting...
Yeah. So, Manisha, we have to look at 2025 with a slightly deeper lens because, when you look at 2024, on the 24th of June, our respectable finance minister came out with the historic budget, where the duty reduction happened, and all that benefit and all that sort of euphoria that we witnessed of the duty drop from 15% to 6% was reflected in Q3 2024. And hence the report, and hence the import numbers are high, because that was also concentrated because June, people were holding on the imports last year. And then the consumption that happened last year was a really strong demand that led purely by the reduction of import duty and the pricing of gold. Now let's fast forward to 2025, where, from a volume point of view, we are about 31% down, which is significant. Value-wise, we're still at about the same level of 1,15,000 crores or so, which is great. And very importantly to understand is that this year we've had an early Diwali, which also means that elements like Pashupatra and even Shraddh and all these elements where the buying for jewelry is all-time low also were in Q3 and not in Q4. I think with those elements, September seems to be at a good spot. And the way we've seen October, it's been a rampant increase and a great dominant consumption that we witnessed at, of course, the all-time high prices.
No, absolutely. Sachin, the other two things that I'm looking at within that report is an year-on-year comparison when it comes to investment. Even at these higher prices, the investment numbers are quite on the stronger side. And the other thing that I'm also looking at is the total gold recycled, and that seems slightly lower than what it was in last year. So would you say at higher prices, people held on to their gold and didn't really bring it on back to the markets?
Great question, Manisha. And I think reflecting on both of them, the investment demand has touched 91.6 tons, which is phenomenally high. I mean, in terms of value, in terms of volume, it's about 20% up. But in terms of value, it's about a 74.5% up and totaling to about 88,970 crores that the Indian investors invested. And this is, of course, largely in bullion, bars and coins. And a certain percentage gets to a very growing and important segment of the ETF. To your point on how this demand really laid out from perspective of
exchange gold.
Question, Misha?
Exchange gold.
Yeah, on the recycling, yes. So you see that our numbers have reported a 7% decline. And what we report in our numbers is gold getting recycled to cash. So it's important to understand that that has gone down at such phenomenally high prices. While the price of gold last year to this, the comparative number, the price of gold is almost 50 to 55% up. But the recycling number going down is a clear indication of the confidence people have on gold as a commodity. And what we do not report in these numbers is that the recycling of gold to gold that gets exchanged on retail flows. And the initial estimates that we had of this year have been strong, but last year the number could be in the range of about 25%.
Okay.
This year we believe, and we will vet them, that we believe that the recycling would have been upwards of 40 to 45% of old gold converting into new fresh designs and new gold.
Sachin, just coming back to the Dhanteras and Diwali week there, and I spoke to Malabar, I spoke to Joyalukas, and they tell me that this is the best Diwali that they ever have had in sense of numbers, value-wise, of course, it's in triple-digit and four-digit crores as well when you look at the overall week there. So would you say October would do much better than what we've seen in the previous quarter? And now as we step into the very, very strong wedding season into the Indian markets, November, December, Jan, Feb, and the second quarter of the next year as well, how are we approaching this, especially given the fact that there has been some correction in prices?
I think a few things, Manisha. Firstly, consumers' obsession in gold. And, all of us have been, surrounded by people who would say, I missed the rally, I should have got into it at a certain different price point and so on and so forth. So the euphoria is very high. Secondly, what's happened is that, there's a great amount of preparation that is done by the industry on offering different kind of products related to current lifestyles and so on and so forth. October has been extremely, extremely, extremely strong. The way, and you mentioned yourself that people have seen the best Diwali yet. And as jewelers and everybody else, they're looking at revenues. The profits are high. The revenues, of course, have been substantially high. And I think that's something that we've witnessed. Now, if you look at the consumption pattern that we've witnessed, and we've been watching consumers very closely, on the 23rd of April, when we touched 100,000 rupees for 10 grams, we were, 1 week later was Akshaya Tritiya, which went on fairly well. Then there was a bit of pause from 100 to 110,000 rupees. And the moment the gold crossed that 110,000 level, it's been a bit of euphoria that we saw and witnessed. And with this sort of little bit of correction that we witnessed in the price in gold, the underlying strength and the confidence of the consumer in gold continues to be very strong. And I foresee that as we look into the festive time, as we look into the wedding purchases, for jewelers, it should be a strong time as well. And the last thing that I'd like to share is that consumers who tend to buy higher value goods, like 100, 150 grams up to about half a kilograms of jewelry, that segment has done continuously very well. And it's very interesting because a lot of wedding purchases either got preponed and so on and so forth. But it's been a very interesting phenomena from a consumption perspective. And I think the consumer will continue to be inclined to consume more gold and more gold jewelry.
Okay, all right. Manisha, thanks very much for that. So gold continues to be glittering at all-time highs. Companies have seen record sales this festive season. Well, we need to take a short break on that note. But up next, we'll get you a CNBC TV18 exclusive. True North looks to sell its entire stake in Fedbank Financial Services. That particular story coming up. Welcome back. So those are the Cipla numbers, and it seems to be bang in line with what the street was anticipating. So 1,351 crores is what they've reported in terms of profit, which is around a 4% growth. The street was anticipating around 3%. The EBITDA has come in at around 1,894 odd crores, which is, again, largely in line with what the street was anticipating at around 1,882 odd crores this quarter. We'll wait by for the top line. I think the top line went by as well. So 7,589 is where that's coming at. That's a little better than at least what the street was anticipating. It's around an 8% growth is what they've reported. So I think the margin should be at around 25% this quarter. So the street was working with margins of around anywhere between 24 to 26 odd percent. Largely, it looks like it's an inline set of numbers with the revenue probably a little better than estimates. The US markets is probably going to see a decline this quarter. It's probably going to be sluggish because of, the opportunity from Revlimid generic declining, and separately price erosion in the US, as well as not many great launches for Cipla. So that would be something that the street would watch. India should probably grow in high single digits, so that should be a growth market which should come through for Cipla. And even the one Africa market should see some amount of steady growth. But overall, in terms of what they've reported, it's around an 8% growth in terms of the revenue. Their margins have come in at around 25%, which is in line with what the street was anticipating. And the profitability is up around 4 odd percent. We're just going to wait by and see what the internals look like. But just based on what they've reported, no real big surprises which have come through for Cipla this time. As you can see, the stock just about lower by around 0.7%. Obviously, commentary is going to be important for them. What is the GLP-1 opportunity for a company such as Cipla? What is the US pipeline looking like for Cipla as well? And going forward, what are they, looking at when it comes to key facilities such as the Indore plant, which has had some US FTA issues. But as you can see, the stock is recovering a little bit from the day's low, so just about lower by around 0.5% at this point in time. So that's Cipla for you, just about lower by around 9 odd rupees.
All right, that's Cipla. Largely in line set of numbers, but more details awaited. With that, we wrap up on this edition of Halftime Report. Stay tuned. Business Lunch takes all the market action ahead.